Hey, this is John Starks. We down here on the street, and you watching Taking Stock.
All right, stand by. 2 minutes to close, and why not kick off this trading week here on Wall Street with a new round of all-time highs, both for the S&P 500 as well as for the tech-heavy NASDAQ. Peter Tuchman, the Einstein of Wall Street, into the close. Space is the place. We got the New York Stock Exchange Space Summit, which happens tomorrow. They're doing the closing bell today, but they got all-time highs. Look at these markets. What are you seeing to kick off the week?
In space. What can I say? Spectacular.
Yeah.
Market is disengaged. Any negativity, anything coming out of the conflict, obviously, and they're liking the market. They're buying everything that's still at a discount. You know, people are sitting there with their shopping lists. Institutions, retailers are all ready just to buy. It's enthusiasm, and they're loving the market. I mean, when you have a market that opens down and spends the rest of the day trending up, that's buying with determination. People are really intent on getting things that they want. I mean, where advanced declines are probably 50-50 probably by the end of the day, meaning that people are getting out of their under or overperformers and getting into value, which is what they want to be doing, and that shows a healthy market. You know, a lot on the for the week. You've got obviously stuff around the Federal Reserve. You've got earnings. A lot to do this week. So
yeah.
We're just dipping our toe in the positivity of what the week could be.
And a PCE inflation print, which comes after the Fed meeting. It's the Fed's most important gauge of inflation. We'll get a sense on where pricing is, what Mr. Powell has to say on Wednesday afternoon, and the rest of the big tech giants. Thanks for being here to kick us off as always. All right, the Space Summit here for the bell. More Taking Stock coming up on the other side of the close. As Peter Tuchman and I were just laying out there a moment ago, 181 companies, more than one-third of the S&P 500, set to report quarterly results this week. That includes 11 different Dow 30 components and 5 Mag 7 names. As for the Tech Mag 7, NVIDIA with the strongest tape out of that bunch today in positive territory, 3.5%. Apple shares down about 1%. And your final tail of the tape for this Monday, April 27th. It's already almost May. I'm not sure how that happened. The S&P up about 1/10. The Dow down about 1/10. The New York Stock Exchange Composite Index also down about 0.1. And the small caps up 0.04%. Michael Reinking joins me now, senior market strategist at the NYSE. Gotta love the little fractional gains on the day. It's not distinct. It's not big and bold. It's like just up a little bit.
A little bit of a tick, but coming into today's session, if you think of April, people might have said that the markets were going to the moon, right? We've been up, kind of about 10% for the month of April in the S&P 500, the best monthly return since kind of 2020.
An Artemis pun? Going to the moon, a space day pun down here?
There you go.
How are you thinking about the massive tranches of tech earnings? Obviously, we still got a few weeks to go for NVIDIA, but the rest of the bunch, these are 5 of the biggest 7 names on planet Earth, and here we go.
Yeah, absolutely. So, look, if you take a step back and look at earnings season, kind of thus far, it's been very, very solid. Right, we're looking at over 80% of companies beating on both the top and the bottom line. Right, earnings are beating by over 10% on average. On the revenue side, they're beating by over 2%. Right now, there's been this kind of bifurcation within the market, right, where you've seen a lot of the more cyclical companies kind of beating estimates for the quarter, but not necessarily raising guidance, right? As we've, as they're showing some conservatism, we're calling that the guidance gap, right? But the one area where we're not seeing any conservatism whatsoever is within semiconductors, within technology, anything that's related to data centers and kind of the CapEx, kind of boom that we're seeing kind of across the country. Later this week we get the mega cap tech stocks, the hyperscalers, all reporting on Wednesday after the Fed meeting, right? And they're going to give us an update in terms of that CapEx guidance. And the street is widely expecting that to kind of continue to move higher.
We've seen the tech trade do very well, discretionary do very well, but software still kind of stuck in a little bit. You and I are taking a look year-to-date performance here. Salesforce down 31%, IBM down 23%, Snowflake 34%. Is that the one part of the trade that's still lagging because we're kind of right back there to the so-called SaaS-pocalypse narrative?
Yes, yeah. I mean, we have the AI disruption has really been kind of one of the key themes, and that's kind of bled itself into kind of financials, private credit, kind of throughout kind of the beginning of this year. But I think, really like the real notable thing is what's happening in semiconductors, right? You had, coming into today's session, you had the ICE Semiconductor Index was up 18 consecutive sessions, over 10% last week, near over 50% year to date, right? And we've seen within that sector, right, we've seen the broadening, right? So it's not just the high performance silicon names like NVIDIA, which did hit a new all-time high today, but we've seen this really kind of broadening out to your analog names, right? Semiconductor names that are more exposed to kind of the industrial side of things, right? And we're seeing kind of a real turn in earnings on that front, and that's suggesting that we're seeing kind of a turn in kind of just economic activity more broadly.
Could it possibly be this Wednesday the final FOMC meeting for the Honorable Jerome Powell? I thought this man would always be Fed chairman. He's been doing it for so long. I expect him to wear a purple tie. I expect him to come out and say good afternoon. Beyond that, maybe we know what happens with rates, but what are you looking for Wednesday? Yeah,
look, I mean, I think, markets widely expect the Fed to leave rates unchanged. I don't really think there's anything kind of controversial coming from that perspective, right? It's just really a question as to whether or not he kind of officially announces that he's going to either step off or kind of stay on, in a governor's role, kind of with, kind of the idea that the DOJ investigation is now kind of been put on hold, right? So, that's the big question for the day. At this point, markets are kind of very much, kind of focused on earnings. We're focused on the geopolitical side of things, which, kind of tend to be seem to be at a standstill. The Federal Reserve's kind of a secondary story at this point.
That's right. We've got the FOMC decision, 2 o'clock. Powell's presumably final press conference at 2:30. Sometimes the first price action is the wrong price action, so watch the tape very closely for Wednesday in particular. The great Michael Reinking, senior market strategist here at the Big Board. Thanks for being here, man. Nice to see you.
Thanks for having me.
Skylar, grab your mic. How about you and I head this way? We're bringing the latest analyst calls on the day that moved today's tape. First up, Baird reiterating Apple with an outperform rating ahead of the company's earnings call. Later on this week, they cite the company's long track record of managing supply chain challenges well. Shares of AAPL are flat since the start of the year. Next up, Deutsche Bank reiterating Tesla as a buy despite shares losing, in their words, sustained momentum. Shares of Tesla down 19% year to date. Finally, Mizuho upgrading CrowdStrike from neutral to outperform. They say they've grown more constructive on CrowdStrike's fundamentals. Shares are down 3% so far here in 2026. Howard will take a quick look at one notable that calls the New York Stock Exchange at home. I remember when this company IPO'd down here back around 2018, having a strong tape today, up more than 7%. Analysts from Rothschild and Redburn upgrading the stock to a buy, citing cost cutting and an improved top line. Shares of Snap are down about 25% since the start of this calendar year, and the average one-year price target for SNAP sits at $7.88 a share. That's upside potential of about 27% or so off of these current levels. With the stock market at all-time high, last week on the J.D. Durkin Show here at the New York Stock Exchange, I spoke one-on-one with the great Jessica Inskip. We talked about what's driving the rally, whether the rally is actually healthy, and what, if anything, could derail it. Take a look.
So I wanted to put together really the pre-conflict period, so from the beginning of the year all the way to February 27th, which is the trading day before we had the closing of the strait, so all the way to March 2nd. So it's giving me an idea of what was the price action before we elevated, where is the price action since elevation, so that's going to be your post-conflict period in orange, and then what is the price action from peak or trough of those extreme levels to as of about midday yesterday is when this was last updated. And it is interesting because you can see it in reports that there was indication that the conflict was going to happen. And you can see that reflected in the oil prices because we did have an increase of 17% and 20% in Brent and WTI post-conflict from the beginning of the year. That, of course, accelerated as we reached that climax, if you will, of the conflict, and that's started to come down. So the importance of this is I want to see the trend to resume or the correlation to quit to understand what the market is paying attention to. And so we can see that oil, of course, skyrocketed, gold fell down, very, very much so. The dollar did strengthen and it's flattened out, so that's good to know. But what I thought was interesting of note is the 2-year moved more than the 10-year, and that goes with inflation expectations because the 10-year or the 2-year moved more, that's telling me that short-term inflation expectations are really what is the driver of this. And you can see that with what happened on the Michigan surveys. And we actually have the next release tomorrow. So I'm actually going to pay really a large amount of attention to what inflation expectations are, which I think is very interesting because of the previous guest, how we are talking about inflation expectations and vibes, but here's a way that we can actually measure it with data that's kind of packed below other things.
Yeah, we'll be on the lookout for the latest UMich numbers on consumer sentiment, inflation expectations, and much more. Is the stock market looking through all of the risks, or is it ignoring them?
I do think it's looking through them right now. And the reason why is when we are just, as you know, is we're trying to understand the impact of oil, is trying to understand the impact that it has on inflation and ultimately the impact on the consumer, which then would lead into the impact of earnings. Earnings are dominated by artificial intelligence right now. So the market can survive without a healthy consumer. It's just a matter of fact at this moment, which means it can look through certain sectors, can look through it, others cannot. And that's what I'm seeing within the price action. So that's why narrowness, I do absolutely on the horizon as far as price action, but underneath the surface, we did have expanding earnings. And so the continuation of that, and if price action, if we are reaching all-time highs across all of the sectors, then that will tell me that it's looking through it. So some are ignoring, but I think that broadly it's looking through it, but that's due to the concentration of technology.
Let's chat a little bit more about Fed and the backdrop for interest rates. Jess, you know, we came into 2026. A lot of people are like 1 cut, 2 cut, 3 cuts, more than 3 interest rate cuts. We'll take a look at the latest numbers here. These are the projections for the CME Group FedWatch tool for December. 70.8% chance absolutely nothing happens between now and the last FOMC meeting of the year. Higher for longer? Are we there again?
Well, I think it's going to depend on the Fed chair, and there might be a shift, which will be interesting. Yeah. He wants to look at trim mean inflation measures, which is going to take out more of these shocks, but it could be integrated into food prices. So it's going to depend if we look at that number, because if we look at that number now, it looks like we're pretty well anchored to 2%. It's because he wants to shift it. Now, what's going to be important is bond market reaction and credibility, sustainability of the Fed. If Warsh sticks with trimmed mean, which it seems like he will, that's fine as long as he sticks to it. If those numbers start changing the narrative. So right now, trimmed mean looks like inflation is well anchored. If all of a sudden it skyrockets because of that food component, which could add some volatility and some short-term shocks, then he needs to make sure that he adjusts policy according to that.
Welcome back to the show. Rebecca Reddick joins us now. She is the COO and CLO of Jito Labs. Very grateful for your time here, Rebecca. I want to start by asking you about your block assembly marketplace, better known as BAM. Why is activity on Solana surging right now? And what do you most want people to know about what BAM is all about?
Thanks so much for asking. Great to be here. Thanks for having me. So BAM is a complementary network to Solana. I think activity is really surging on Solana right now because of institutional interest in transacting on chain. I think we've seen a lot of institutions getting into this space over the last 18 months in a meaningful way. BAM really helps that adoption in many ways. It allows for customization, for privacy, and for speed and certainty in landing transactions. Solana obviously is known for its speed, which is something that institutions are really looking for. But I think that the combination of the speed and also everything that Solana can offer today really is allowing for greater institutional adoption and usage of Solana.
Rebecca, while I have you, I want to get your take on CODA. This is institutional crypto custody, specifically in South Korea. How big of a deal is that CODA deal, and how important is Asia overall for crypto growth?
Asia is incredibly important as a sector or an area for crypto growth. I think South Korea has been really forward thinking, both in regulatory as well as just in terms of how the marketplace works. There's been a lot of receptivity. The CODA deal definitely is really exciting on our end in terms of enabling usage of new assets, something called Jito Sol, which we call liquid staking tokens. The SEC in the United States calls them staking receipt tokens now, but ensuring that there is adoption and access in Asia to these special type of reward bearing assets, I think is really important.
I wonder what you think it means for the crypto space, the crypto ecosystem overall, if the Fed does in fact get Kevin Warsh, who a lot of people suspect might end up being a bit more market friendly than previous heads of the Federal Reserve.
You know, it's very interesting. We've seen Kevin Warsh's disclosures about his crypto holdings. He certainly has been a very active or interested investor in many ways in the crypto space. And so whether, you know, I don't know if we can say the Fed is going to be good or bad for crypto as crypto, but I certainly think we will have a Fed chair, if Kevin Warsh is confirmed, who really understands the crypto space and may understand the impact of something like how important stablecoins are to you know, prominence and preeminence of the US dollar nationwide, which is obviously, internationally. And so I think that's a really important part of thinking about Kevin Warsh coming in as Fed chair.
Rebecca, unfortunately, I'm out of time. I had more questions about regulation, Clarity Act. That means you'll have to come back again soon, but I'm really grateful for you kicking us off here on Monday. Rebecca Reddick, COO and CLO of Jito Labs. Rebecca, nice to see you. Folks, don't go anywhere. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Let's do it. Welcome back to the broadcast. Jim Bridenstine joins us now down here on the trading floor of the New York Stock Exchange, just moments after ringing the closing bell. You brought about a close to the markets, brought some all-time highs. Nice to see you.
Yeah, I take full credit. I mean, what do you expect?
You were a member of Congress. You were the 13th NASA administrator. Do I have that correctly?
I was the 13th.
Pre-Bill Nelson, talk to me first and foremost about the New York Stock Exchange Space Summit happening this week. And what do you see more broadly about Wall Street institutional interest in the space?
It's been amazing. So the history of space is it's government owned and operated. It was the purview of only governments. And of course, probably in the last 10 or 15 years, that's slowly been changing, but now it's really taking off like wildfire. So private capital and capital markets are playing a role in space, whether it's civil space, commercial space, national security space. Private markets are really going to differentiate how we do space in the future. And I would say that's a really good thing for all of those markets.
I was going to say, so given your government background, a proud member of Congress, you oversaw NASA, you like the fact that the private sector has as much skin in the game as it does for the present and the future of space.
Absolutely. We need the United States of America to be preeminent in space. And the only way to achieve those outcomes is to take advantage of what makes America so special, and that is our capital markets. It differentiates us from everybody else on the planet, and it has for forever. Now, a lot of others are catching up, but certainly private capital markets are going to be important for the space community as we go forward.
$1.5 trillion for a defense budget. I know you remember well the era of the bills you had to pass when you were a member of Congress, keep the defense funded. Why is more and more defense spending moving into space? It's been a big topic of conversation.
Yeah, if you look at the president's budget request, the Space Force, which we created when I was in the House of Representatives, the Space Force is getting a plus up of almost 75%. You look at the rest of the Department of Defense budget, it's going up, of course, and there's a lot of reasons for that given what's happening around the world. But space is critically important for a whole host of capabilities: intelligence, surveillance, reconnaissance. Of course, GPS is not just about navigation, it's a timing signal for networks. We think about space-based infrared for ultimately missile defense, communications, over-the-horizon communications, but also nuclear command and control. We use space for a whole host of capabilities. I didn't even mention weather or all the commercial things happening with communications. So just a tremendous market out there, and the capital markets are recognizing it really for the first time.
What does it mean to have and embrace space-based awareness? What does that conversation mean to you, knowing how it has evolved since your years back on Capitol Hill?
When you say space-based awareness, you're talking about how people are perceiving it?
Military defense, and especially through the lens of governments and working with private companies.
Yeah, so when you think about the history of space, it's been a sanctuary for a long time. And people are now recognizing that how we use space, not just for how we live and work here on Earth every day. We're on the New York Stock Exchange. Banking transactions are dependent on a timing signal from GPS. The power grid is dependent on a timing signal from GPS. Our wireless networks dependent on a timing signal from GPS. All that's just how we live and work. But when we think about how we do national security and defense, the competitors that we have, or I should say our potential adversaries, have taken note how we use space to do national security and defense, and they have put it at risk. They've launched direct descent anti-satellite missiles, co-orbital anti-satellite satellites. They're using technologies like jamming, spoofing, dazzling, hacking, all these different things that are proliferating, and we as a nation have to be aware of what's happening. Space-based, space domain awareness, as well as domain awareness in general from Earth looking up to space, is going to be critical for how we go forward. And the Space Force is taking on that mission in a big way.
I'm about out of time. They're telling me to wrap it. I can't let you go without getting your reflections as you look back at Artemis 2 over the course of the last few weeks. You've been working on things like that for a long time.
I have been, and I will tell you what an amazing moment for NASA. You know, a lot of people think about space, national security, and commercial things, but America does stunning achievements in space. And what NASA does and the Space Force can't do is NASA does things in the clear. The whole world can see when America does stunning achievements, and that inspires the next generation to get involved in science, technology, engineering, and math. We're building a moon base, and that moon base, of course, is going to be to go get precious metals. We're talking about what would be called rare earth metals or rare earth minerals. Of
rare
course,
moon metals, maybe you call them now?
Yeah, lunar resources, but also water ice. In 2009, we discovered that the moon is covered in water ice, and the south pole of the moon has hundreds of millions of tons of water ice that is in fact pure water ice. Hydrogen for fuel, it's oxygen for breathing, it's water for drinking, and of course helium-3 and other resources on the moon. So there's been a lot of talk about Greenland or Ukraine and resources. The moon has far more than those countries by far combined. Multiply it times 100.
It was an incredible mission. We all watched it live down here on the trading floor for that launch at that 6 o'clock window. We followed it every step of the way. Administrator, welcome back to the New York Stock Exchange. It's really nice to see you.
Thanks, JD. Good to be here.
All right, a lot more taking stock coming up right after this. Well done.
welcome back to Taking Stock. I am Scarlett Sieber from Money 2020, and we are live from Money 2020 in Asia in Bangkok. So I have a great guest with me today. We have Nikhil Joshi, who is the COO of Emergo. So welcome, Nikhil.
Thank you for having me.
So for those of you who don't know, tell us a little bit about who Emergo is.
Sure. Emergo is a co-founding entity of the Cardano blockchain. I think your audience is probably familiar with the Cardano. We're actually headquartered here in Singapore, which is what brings us to Money 20 in Bangkok this year. And we came out with a big announcement today. We're essentially, our roots are in Cardano, but we see ourselves as a multi-chain product company, and we are delivering something very big.
So you made a huge announcement. I mean, the internet, everyone is buzzing about it. People keep stopping me to talk about it. Can you tell us a little bit more about why now? Why is this so revolutionary today?
Sure. So Money 2020 is a really really good focal point for us to make this announcement today, because there is so much talk around crypto, around payments, around AI, DeFi, and the point that we're making is that all of this is going to converge. This has been talked about in a pretty binary way in some instances. We think it all comes together, and what it allows us to do is launch SecondFi, which is what I did earlier today on the intersection stage. Yes. And it's essentially a neo-finance platform, meaning that we believe everyone will have their first bank account, the one that you inherit because of where you live. You'll also have your second account, and that will allow you to be take control of your own assets, have self-custody. It allows you to make payments, micro payments, basically save, spend, send, stake, all of this stuff in your pocket with the fraction of costs that you would otherwise have for cross-border payments on existing rails. You can earn yield, and over time, as agentic AI comes into the picture, well, how are they going to transact with each other? Through stablecoin, once again, on blockchain. And as agentic AI becomes more prevalent, you need blockchain to keep it in check and make sure that what is correct is, inverted commas, correct.
I love that you've hit every kind of key point that we've heard over the last few days here at Money 2020 Asia. I love that you went into the convergence piece. We actually wrote a book, Intersection, around the convergence of TradFi, DeFi.
There we go.
And then between Emergo and SecondFi, we're making it happen. So where are you going from here? I mean, this was a huge announcement today. Let's talk about where we're going next.
Sure. So the website is open for the wait list. We will launch fairly soon, and over time we will, of course, our user base is predominantly Cardano. We will go past Cardano to other crypto ecosystems, and over time we just see, as we say, you will have your first bank, you will have your second account, and so over time people will be agnostic, not just chain agnostic, but agnostic as to whether they are dealing with fiat or they're dealing with crypto rails. And that's the way we see things going. So that is the market, and this is particularly important in emerging markets. So again, we're headquartered in Singapore. Southeast Asia is our playground. That's why it was super important for us to be here at Money 2020 this year, and really capture those markets that benefit, have real utility from what we're offering. The ability to make micro payments, to have cross-border payments at a fraction of the cost and a fraction of the time.
So many valid points right there. Micropayments are absolutely critical. Nikhil, thank you so much. For all of you, that's Nikhil Joshi, COO of Emergo, with the big announcement, the launch of SecondFi. You can find more on the website below. We look forward to seeing you next time.
Hello and goodbye. Thanks for watching. See you tomorrow.